In turbulent times and market downturns, people are desperately looking for safe investments that can protect them from the storm, but they don't want measly returns that don't even keep pace with inflation. The problem is that finding an investment with high returns and low risk is difficult, bordering on the impossible. But every so often you run across an exceptional find that meets both of these criteria. After doing a lot of research, I have found a really exciting investment that combines high yield, like well over 9% as of the date of this video, coupled with guaranteed returns by the US federal government, and significant tax benefits to boot. Sounds too good to be true, I know, but in this video, I am going to discuss in detail this unique investment and share its key benefits. I will also cover its limitations and drawbacks, so you have a balanced view of what's involved. Finally, I will show you how you can get started investing in it right away. Let's get into it. The investment I am talking about is a Series I savings bond. It is essentially a bond issued by the US Treasury and currently pays 9.62% annually. I don't think I have to explain to you why that's an amazing yield and far superior to most bonds out there, especially when you take into account its low risk profile. These bonds are backed by the US government, which means that the default risk is extremely low. So right off the bat, you have this super safe investment that also pays a really high yield. But on top of that, your returns are protected from inflation. This is one of the unique features of a Series I bond. The 9.62% rate that I mentioned earlier is a composite rate, which means it combines a fixed rate that applies for the life of the bond and an inflation rate that is set twice a year. So as inflation rises, the inflation rate will adjust accordingly. It's an almost perfect inflation hedge, which is incredibly valuable in this high inflation environment. The benefits don't end there. Series I bonds also offer some great tax benefits. First, your returns are completely exempt from state and local income taxes. Second, you can defer paying federal taxes on interest you earn until you cash the bond, which can be for up to 30 years later. This allows the funds to compound and grow without tax headwinds. Third, you may get tax breaks if you use the funds from your bond to pay qualifying educational expenses. Assuming you meet the requirements for this, it's an amazing way to save for higher education for your children or grandchildren. Now, the Series I bonds do have some limitations and drawbacks. As mentioned, these bonds can last for 30 years, so they are intended to be long-term investments. That being the case, you are not allowed to cash your bond for at least a year. After that, you may cash the bonds in, but you will forfeit the last 3 months of interest unless you have held them for 5 years or more. After 5 years, you are free and clear and you can cash them in and get the full interest and principal without any penalty or forfeiture. Another limitation that you want to be aware of is that there is a cap on how much you can buy. If you buy electronic bonds, your maximum purchase is limited to $10,000, and if you buy paper bonds, your maximum is $5,000. How do you buy Series I bonds? If this type of bond sounds good to you, you can buy Series I savings bonds safely and securely through treasurydirect.gov, which is an official US government website. As I mentioned, you have two options when buying. You can purchase electronic bonds or paper bonds. I already covered the maximum amounts for each of these versions, but the minimum purchase amount for electronic bonds is $25 and the minimum for paper bonds is $50. For me, I think electronic bonds are the way to go, because they just have better terms and more flexibility. So there you have it, a little-known investment that offers attractive yields, safe, inflation-protected returns, and amazing tax benefits, all with the backing of the US government. I think they are a pretty compelling investment option, especially during volatile times. If you enjoyed this video, please take a moment to hit the like and subscribe buttons. It helps a lot and I would really appreciate it. Thanks for watching.